Good morning, good afternoon, everybody. I'm your boy, Sean McLaughlin. I am Options Sean on Twitter. This is the All Star Options Jam session for February 1st, 2024. Hope everybody's having a good start to the month. We have some green in the indexes, but it's kind of feels like a false green to me, given what has happened in the immediate aftermath from the Federal Reserve action yesterday. Was it yesterday? Yeah. But hey, before we get into charts, let's drop the old disclaimer here that everything we discuss is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. As always, we like to start at the top here in the jam session, get kind of the big picture overview, and the S&P 500, which is the broader index that I track most closely. I track them all, but the S&P is the one I track most closely. We had a breakout. We finally broke out above this range over that it kind of been acting as resistance for the last few weeks. Finally broke out, but I don't know. Is this going to be a false breakout? Only time will tell. And we got a long way to go to find that out. But right now, this breakout is looking a little tenuous. Volatility index VIX, we spiked a little bit yesterday. Certainly not at alarming levels yet, but something to keep an eye on as VIX is rising a little bit. Now, we did not have a jam session last week. We usually do these on Thursdays, but last week the entire All-Star Charts team was traveling to New York City for our Portfolio Accelerator event. So Thursday was a travel day to get back home. So unfortunately, we did not do the show. What that means for this show is that we have a little bit of a longer show today because we got a lot more positions to catch up on and more importantly, stops to update. And actually, let me go back to that SPY chart just at a high level. We have a lot of positions that we're updating stops on this week because, look, we've had a fantastic run in the S&P 500. From these October lows to the recent high, that was a 20% run up. 20% in more or less 2 months, 3 months, right? A little less than 3 months. And it was pretty much a straight line higher. We had a little choppiness here, right? But pretty much a straight line higher off those October lows. So we've had a lot of good runs and a lot of good positions. With the way the market's acting right now, I'm not going to sit here and say that we're about to head into a bear market or that this failed or that this breakout is indeed a failed breakout. But I do want to be prudent and start a little bit more aggressively raising stops on some existing positions just to lock in some profits or to minimize the potential for losses in the case that we do roll over here. So, but before we get to the stops, let's just talk about positions that we've exited since we last spoke 2 weeks ago. I've got some good news. We'll start off with the good news, and then we got a little bit of bad news. Not terrible news, but that is what it is. The first is Archer Daniels Midland, ticker ADM. This was a bearish bet that we put on back on January 12th. We sold a bear call spread, meaning we shorted the February 70 calls and we protected the position with the February 75 calls. We collected $1.65 to get in. Well, we had a nice little fall out of bed here following some news, I think, about a CFO departure. It doesn't matter what the news is. Surprises tend to happen in the direction of the underlying trend. And back here, when we got in, the underlying trend was decisively lower and we had broken support. And then a couple of days later, that's when the news comes out, the surprise news. And sure enough, the stock got cratered. We actually bought back in much lower than our intended profit target. I mean, we had a higher profit than we intended because we were able to buy this back for much cheaper than what we originally intended. We wanted to buy this back at 80 cents. I think we ended up paying 25 cents to cover this spread on the 22nd. So, hey, it's nice when you get more profits than you planned on. So that's the good news. The bad news is the next three trades here are positions we've got stopped out of since we last spoke. First was this Encino, ticker NCNO. We were long some May 35 calls we got into on January 8th. Things were looking good here briefly, but about 3 days after we got in, the stock rolled over and never recovered. On the 18th, it closed below our stop loss level. On the 19th at the open, we exited the trade, and it looks like that was a good move because it looks like we're going lower from here. Next up is Tesla. This was a Iron Condor trade that we put on January 17th. We put this on ahead of earnings. We knew earnings was coming. I thought that the options in this name were a little bit overpriced due to the impending earnings event. And we figured that this sideways action here would continue within that 240 to 190 bounds. Unfortunately, it did not. Our stop level was 187. We closed below that on the 25th. We exited the trade soon after on the 26th. It wasn't a terrible loss. We collected 310 to get into this trade. I think we covered it for 4 and change. Let me pull up my my spreadsheet here. I believe it was 4 and change we got out. Either way, it was not a terrible loss. Well within an acceptable size loss for our position. I'm just looking up here. Yeah, we paid $469 to get out, so not terrible, all things considered. All right, next up, Pfizer. This was a bullish risk reversal that we put on back on January 3rd. We shorted the June 27.5 puts and purchased the June 32 calls. We did it for a 5-cent net credit. As you can see, we were betting that this little low here was going to hold, but it did not. And we got stopped out when it closed at 27.50 was our stop loss level. It closed below that on the 26th. We got out. We are no longer in Pfizer. So that's the positions that we've exited. Now we have a whole bunch of updated stops since we last spoke. I think we have about 10 of them. So we'll just rip through these real quick. International Business Machines, IBM. We bought long calls on November 20th. This position's working great. We had a tremendous gap in our direction early last week. Again, surprise moves tend to happen in the direction of the underlying trend. This is no difference. But now we're going to try to lock in some profits here. Our 175 is the new stop loss for IBM going forward. If we lose 175, we're going to exit this trade. Next up is Amazon. We're in a bull call spread we got into on November 22nd. We're long the July 150 calls and short the July 180s. We paid a 1080 for it. We are now moving our stop up to 150. If 150 does not hold, we'll likely suffer a loss on this trade, but should be a very small loss, all things considered. So, but this is one of those names that if the market's going to roll over here, Amazon feels vulnerable. So we are moving our stop to 150. All right, Ecolab, ticker ECL. These are July 220 calls that we got into back on December 22nd, right before Christmas. It's been consolidating. I like this action, but I wish it would kind of hurry up and clearly, decisively break through here and break above 200 and fill into this gap from 2022. But so far it has not. So we are raising our stop to 194, and let's hope that one holds. Next up, Datadog, ticker DDOG, bull call spread. We got into this. We don't have the date of entry on this one. Let me look on my spreadsheet here. We got in on December 4th. There we go. This is a bull call spread. We're long the July 120 calls and short the July 150 calls for a 990 debit. So far, it's it's working in our favor. It's not gone huge in our way. We definitely were up a lot more, not a lot more, but significantly more about a week and a half ago. But if we cannot hold 119, that's my signal that we need to take risk off here in Datadog. So that's our updated stop. Again, this is more of an aggressive stop loss due to what we think might be coming our way in the markets. Okay, next up is Rocket. We don't have the trade details on here, but we are long the June 13 calls. We paid $1 for them back on January 19th. And it was looking great. It pulled back, but it held this level, which is important for us. And that level, the low that we saw there at 1150, that's where we're going to stay. That's where we're going to leave our stop loss order. If we can't hold there, then this might be a fake breakout that we don't want to be in any longer. So 1150 on Rocket going forward. All right, Republic Services, ticker RSG. We got into this on November 13th. These are April 165 calls. We paid $450 for them. Right now, our stop is at 165. What we don't have on these charts, my guys don't like to put these on the charts, but A lot of times the 50-day moving average is the level that I use as just kind of a good rule of thumb. If a trending stock can't stay above its 50-day moving average, that's oftentimes a place that I want to start getting out. So some of these stops that we're talking about here, these levels coincide with where the 50-day moving average is right now. And Republic Services is one of those. 165 is where the 50-day moving average is approximately. So that's the level. If we can't hold that level, right now we're well above it, so that's good. But we're just being a little bit more aggressive again. So 165 in Republic Services. Next up, Snap. This is a call calendar spread. We got into this. We don't have the date on this chart either. January 5th, we got into this. We are long the we are long the June 20 calls, but we sold March 20 calls against it, creating the calendar spread. We paid 85 cents to get in when we got in, and that is the most we can lose in a worst case scenario. Snap could go to zero, and the most we can lose is 85 cents. The plan with this is when if the March 20 calls lose enough value that we can cover them at 25 cents, then we're going to roll it into April, collect more credit, and we might repeat that in April and roll them into May. Each time we do that roll, that will lower our net debit in the trade and will lower our maximum loss. All right. So that's, but if we can't hold 1550 in Snap, then we don't want to be in the trade anymore at all. And we'll just close the entire thing down to reduce the risk of any further losses. Next up, Spotify, ticker SPOT. We are long a bull call spread, the July 200 calls, and we're short the July 250 calls. We paid $17 for that. We are now leaving a stop at 190. This breakout is holding this gap. We had a little breakaway gap in early December. We came down. We looked like we wanted to fill it, but we held, and we're kind of using that level as we don't want to get into that gap. So 190, as long as we stay above 190, we like our chances here. And who knows if we get and by the way, if we get to 250, that's where we're taking profits on this one. But Spotify, our new stop is 190. Next up, TJX. We're on $100 roll notice. We've been waiting for this $100 roll. We got real close last week. We're long the April 100 calls. We paid $1.64. Got into this back on November 10th or July 10th. We have a crawler here in my office. She thinks that nobody can see her, but everybody saw her. You could stop crawling. All right. Anyway, sorry about that. TJX, we're long the calls. Our new stop is 93.50. That corresponds with the upper level that we saw in the summer and then again briefly in October. That was upper resistance before. We're now using that as support. 93.50. A TJX can't hold 93.50. We are out of this trade, reducing risk as best we can. And Taiwan Semi. This is a trade. These are new trades. No, not new trades. We got into this right before we left for New York. Taiwan Semi. I'm sorry we don't have the trade details on here. It's been a busy morning here at the old office, and I couldn't proof these charts before we went live. But Taiwan Semi. Where did we bought the May 115 135 bull call spread. We got into this on January 23rd. We paid $6 for it. It was looking great. It's getting a little caught up in some of the pullback that we've seen over the last couple of days. But as long as it stays above 110, then we're going to stick with this position. Taiwan Semi. It's one of those semiconductor names that if the market holds here, if things hold out the way we think it will, the way we hope it will, Taiwan Semi is one of those names we think can really lead the charge. We're long the bull call spread, like I said, but 110 is our new stop. All right, so that's it for all the updated stops. Now, since we've last spoke, for those of you who are not subscribers to All Star Options, we put out trade plans multiple times per week of each trade that we get into. We get into the trade details, why we like the setup, where our risk management is, like where are we going to exit the position for a loss, where are we wrong, right? What do the charts tell us? We also get into where and how we will take profits and the strategies that we're using, right? We get into all those details. We publish these reports multiple times per week. If you want the details on these trades, you could head to allstarcharts.com, head to the members section, head to the options section. You will find all of our latest reports. You'll find all of our reports there. I mean, you can go back in the archives 5 years and see all the trades that we've done with the All-Star options. If you'd like access to that, shoot us an email, info@allstarcharts.com, and we'll get you hooked up. In the meantime, I'll just rip through without getting into the details of each trade. We'll just kind of make you aware these are trades that we're in. We got into Rocket a couple of weeks ago. We got into a bullish trade here. We just talked about Taiwan Semi. This is a relatively new trade. We got into Snowflake during our portfolio accelerator event last week. We did this trade live with our attendees. We walked through how and why we were getting into it. So that was a fun discussion. We got back into Wells Fargo. We'd already gotten stopped out of it once recently during this little whipsaw down here where it says oops, and then it went back up and made new highs. We might be getting whipsawed out of this thing again twice. Wells Fargo tripped it trade at one point. I haven't looked at it in the last hour, but at one point this morning, Wells Fargo was trading below our stop loss level on our new position. We'll see where it closes. It's the closing price is what matters most for me. But we are once again in a bullish Wells Fargo position. On the flip side, we got a couple bearish trades on this week. We got bearish in Mosaic, ticker MOS. We're losing this support level. This could be a good night for Mosaic. We'll see. And Lululemon, we feel like this is a failed breakout here in this circled red area and losing support or back below resistance over here. So we're bearish in Lululemon as well. Again, if you want details on any of those trades, if you want access to that, shoot us a question at info@allstarcharts.com. Also, if you'd like to sign up for our free email that goes out multiple times per week, where I write about options trading, I share a free options idea every week, and I talk about just topics that are on our mind about options trading that options traders will find relevant to their process or their education. It's a free email that goes out multiple times a week. Again, info@allstarcharts.com. Let us know you'd like to sign up for that and we'll get you hooked up. All right, we got through it. That was a lot of charts, a lot of things to catch up on. We had a runner here in my office. Hope that didn't distract anybody too much. I think it's hilarious. She didn't think anybody could see her. But hey, I'm Sean McLaughlin. I am Options Sean on Twitter. Thanks for tuning in. We'll see you again next week. Until then, trade them well. Have a great weekend. I'll catch you next week. Take care.